Thank you all for being here. It's 12 o'clock. We'll go ahead and get the meeting started, which is a special called meeting of the Human Resources and Insurance Commission of Blount County. Jane, if you would please play the emergency announcement.
Before we get started, let me read the emergency evacuation procedures. In the event of an emergency evacuation, an alarm will sound. Everyone should exit the building by way of the nearest stairwell in a safe and effective manner. If the nearest stairwell is blocked by smoke, use the other stairwell. Do not use the elevator. Once you have reached the main floor, follow the exit signs to exit the building and quickly proceed away from the building. Please be mindful of others evacuating and of emergency vehicles.
Jody, if you would please call the roll.
Okay. Commissioner Stinnett? Here. David Merle? Here. Gary Farmer? Here. Phyllis Crisp? Here. Grady Caskey? Mike Kaler? Here. Bill Dunlap? Here. Sheriff Braun? Here. Mayor Mitchell? Here. Mike Lewis?
Here. We have a quorum. Okay, is there any public input on an item on the agenda? Come forward, state your name, please.
I'll make this quick. I know it's lunchtime. You guys need to get back to work again. But I spoke at the commission meeting thanking some people here for...
I'm sorry, what your name?
My name is Ken Nauman. I'd like to tell you a little bit about me so you're not sitting here wondering who I am all the time, okay? I served in the military for 2 years. I volunteered in '66, went in as an officer, commanded 50 people, and then was an S3 officer at battalion level. I went to work at engineering companies, General Electric Company and Honeywell. I got involved in management later on in my career. I made budgets. I mentored people. I had to do a lot of administrative things, and that's why when I saw people start to really care about your employees, that's when I thought I should compliment you on that. So that's where I'm coming from. The statement I made about that this wasn't our creation, it wasn't entirely true. We made some investments that we're now having to deal with back 20, 15 years ago. And it's the collision of those two things that have brought us to this point. And so I think that in this healthcare thing, I know I'm on Medicare. I've been on Medicare now for 7 years. I'm 72, just so you don't have to calculate the math. But, you know, I pay $300 a month, okay, for my health care. $300 a month. That doesn't cover any expenses, whatever. Medicare is not free. I don't get subsidized. You get Part A free. You get Part B costs you $104. It's CPI connected, and it's also means tested. So if you make more money, I have friends that are paying $200 a month for what I pay $104. Then I have to buy a supplemental policy, which is about $150 a month. And then, of course, that doesn't include my drugs, which means I have to buy another drug plan. So you add all this up, I'm paying $100, my wife and I, and oh, there's no spousal programs here, by the way. You know, I don't have a spousal program. My wife and I both pay $300 a month. I found out last time that we pay 80% of our employees' health care costs. That's a lot, okay? I just think that if you're looking at Mamaw and Papaw out here, you know, you got to think about the fact that the Mamaw and Papaw are paying a lot of money for health care. When I started at General Electric Company in '69, I paid $25 a month. When I got married, I paid $75 a month. Healthcare in the country was $300 million business. Today, it's a $2-some-odd trillion business. This didn't happen overnight, folks, and we're going to have to deal with it, and this county is going to have to make a decision at some point to either stay in this business of self-insuring ourselves or get out of it. It's coming. So those are my comments. I just want to let you know that, you know, and by the way, I'm an independent voter. I voted for Mr. Bredesen when he ran. I voted for Mr. Haslam the last time. I look at people and I try to evaluate who they are. And do they have courage to stand up for their convictions? And all this hyperbole I hear, it doesn't endear me. And I think it doesn't endear you to a lot of voters out there. Thank you.
Thank you. Any other public input? Seeing none. Item 4 is action on the benefit plan design and premium structure changes for the 2016 plan year. At this time, the chair would entertain a motion to approve the original proposed Plan 1 design from CBIZ that was presented at the August 18, 2015 HR committee meeting. Chair would entertain a motion.
I move that we move on this request.
Motion by Commissioner Stinnett. Is there a second?
Second.
Second by Mayor Mitchell. Discussion?
I would,
Sheriff Brown?
yes, Mr. Chairman, I would move that we amend it to remove the tobacco surcharge until we get a wellness program, because I'm like Commissioner Farmer said the other day, the more I thought about that, I hate to make liars out of good people, and I don't know, self-reporting is the best way to go at this time.
I'll second that amendment.
Second by Commissioner Farmer. The amendment is to remove the tobacco surcharge. Discussion on the amendment.
If I might, sir,
Commissioner Farmer?
there's a couple of reasons on this. Back about 6 or 7 years ago, we went through this same thing with this body. We sent out questionnaires. We found out very quickly that everyone's not going to be honest. But my understanding on this by law is if we add this in, I don't think we're currently covering Chantix and things like that, which are the cessation drugs. If we do that, we do have to cover those, and up to and including therapy and everything else. I don't think it's going to bring in near the amount of money that Cole thinks it will. I know he's using industry standards, and I don't fault him for that at all. I just don't think it will be anywhere near as profitable, and if anything, I think it may end up costing us money. That's why I would, right now, until we get a wellness plan in place, move to strike it.
Cole.
Chairman,
Commissioner Stinnett?
we have to start someplace. And our employees, when we come in next month and start open enrollment, there's an affidavit there that they sign that says that I'm telling the truth. And that works, guys. I mean, when you sign your name that I'm telling the truth on this, and you're talking about your employer, and you lie to your employer, then you're jeopardizing yourself. Now, what those consequences would be is we've not crossed that bridge.
Correct.
But we have to start. We've said that a number of years ago we tried this. It's time for us to start it. I think that Mr. Harris has a representative here who can talk to us about this and give us some ideas about how this works, and can she, Chairman, excuse me, can we request the representative who's the expert on this to come speak to us?
Mr. Harris, you're recognized. Or certainly you can introduce.
Yeah. Thank you, Chairman. I've brought Amy Howe here today. She's our wellness coordinator within CBIZ. I've asked her to pull a lot of information on the tobacco program. So I'll recognize her if that's fine.
Absolutely. Please come forward. And introduce yourself.
Hi, I'm Amy Howell. I've been at CBIZ for about 4 years, and I'm a corporate wellness program consultant. So I know that you're thinking about doing a tobacco surcharge. When you get into that world, there are some considerations that you have to think about, and that's part of my job, is to help support our clients with those. One of the primary pieces that you have to think about within HIPAA is offering a alternative for people that don't meet the standard. So in this case, the people that don't meet the standard that you're asking would be the people that smoke. So you would have to provide an alternative for them, and that's where you would come in with the cessation programs, and you have a lot of options in there. So really, as far as like a best practice to announcing this to employees, it's going to work a lot better if it's in conjunction with, we want to help you to quit smoking. It's better for your health, and that's better for us. And we're going to give you these resources to help you quit. So it's not necessarily, that we're trying to penalize the smokers, but we really want to help you to make a change. And as far as, what you have to provide for them, it's kind of, there's not really a lot of specifics. It's really just that there's some kind of cessation opportunity or cessation program. So you wouldn't necessarily have to cover Chantix. I will say that there are studies that show that, the quit rate is a lot higher if you cover some type of drug. There's also other drugs besides Chantix. There's some generic drugs that are typically prescribed as antidepressants that doctors are prescribing for cessation purposes. So you could cover those if you wanted. There's also, nicotine replacement therapy that you could reimburse employees for, and that would be the patches and gum and that kind of thing, and that's going to be a little bit of a cheaper option too. But there are also some free resources out there that you can, push your employees to do, and or require them to do to get that surcharge waived. There's a Tennessee quit line, and with that, they get set up with a coach and everything, and then you can, if we sign up as an employer, if Blount County government is the employer for this, then we can track who signs up for it, and they will give reports to you as who's completed it or who denied that they wanted to do it, So there are ways to keep up with that, and that would be at no cost.
Commissioner Farmer?
I'll still refer back. She sort of actually hit exactly on what I'm on. We haven't done anything toward this. We're going to start charging up front. We have no policies. We have no procedures. We don't know what we're going to do right now. You just stood there and said we don't even know what drugs we're going to cover yet. So to put it in here now and start charging for it up front, we're going to lose our posteriors, is what we will end up doing, because we don't even know now what we're going to cover. Yet we're going to start charging. If we start charging, then we've got to pay for the cessation. So my premise would be on the whole thing, I could care less one way or the other, but we're not going to clear $120,000 profit off of this. And if anyone sitting here thinks we are, we're not. Not the first year, because we don't have anything right now. There's no teeth to it. If they don't tell the truth, what are you going to do, Mr. Stennett? We have no policy in place to deal with it. That's my whole point. You going to kick them off the plan?
May I speak?
Commissioner Stennett?
That's what the HR is for, and she still has until January to come up with a plan. And just like our representative just said, there's free help there. We don't have, it won't cost us a thing to get help if we use the free stuff. Okay, there's a couple avenues that's totally free to us, and then if that doesn't, if we decide, guys, wellness is going to cost us. We're going to have to spend money to save money. And it doesn't happen today. It happens in 6 and 7 years from now when we get to the point where we're saving money. So we either go down the trail to start saving money, or we continue to spend money and back up. Thank you, Chairman.
Thank you, sir. And my understanding of the whole wellness program in general is that it's a short-term and a medium-term cost for a long-term benefit. We're not going to change people's behaviors if we don't ask them to change their behavior. And so if we don't do anything, we're not going to encourage anybody to ever quit smoking or using tobacco products.
As chair, are you speaking on the issue?
I'm giving an opinion, yes.
You're not supposed to, you're supposed to conduct it.
Any other comments? Okay, the motion on the floor. I'm sorry, the amendment on the floor. Oh, Ms. Crisp?
Jenny, could you give us your opinion as working in HR, something maybe that you have dealt with on this topic, maybe at a previous employment?
In my years of HR at previous companies, we had tobacco surcharges on our plans, and the employees, when going through open enrollment or signing up as a new hire, would have to answer the question, are you a tobacco user, yes or no? And then if they answered yes, it was, well, would you be willing to enter a cessation program to quit for a reduced premium rate? We had some people that would say yes, and we had some people that were not interested in quitting and would just pay the higher rate. But for the people that would enter the cessation program, we used the most recent employer that I had that did this was with Cigna, and we used one of their programs that they had there where the employee would call the program. They were assigned a quit coach is what it was called, and my husband actually went through this. A quit coach, and your coach called you weekly, monthly. You set up a time for them to talk to you. He was sent the Nicorette gum, and of course the cost was on the employer's side of that for that, but it wasn't very expensive. And he worked with the quit coach, took the gum, chewed the gum, and hasn't had any tobacco in years. So, it is successful if the employee goes into it with the right attitude. So I definitely think it's something that we need to do. As far as the administration piece of it and holding people accountable, you could look at it from a policy perspective that if they were to, say that they were not a tobacco user and we later found out that they were, they have essentially falsified a document, and you could take a progressive discipline approach and, have a counseling session with them, document it that way. It could lead up to termination. There are lots of avenues that we could pursue with that.
Commissioner Farmer?
That's my entire point, cart before the horse. We have none of that set up yet. We're wanting to start this already. That was my whole point.
Commissioner Stinnett?
How long would it take us to come up with a policy?
Jenny?
I would have to know, what we want the structure of the tobacco cessation program to look like, which I think based on, what Amy has told us, there's plenty of free programs. If we went with the state's quit line, I think, or whatever it is, we would follow that, program as far as putting a policy in place, and then I could, write what we would expect our employees to do, that they would adhere to that policy and, be honest. I would think I could have something like that done by the time we had open enrollment, but it's a policy, so we would have to, I believe, we would have to bring it back to this board for its approval. So, and then the commission too. So, by the time we do open enrollment, we're looking at October, November. So I don't know if we could have it done by then. I would like to think we could, but we're looking, excuse me, at the time frame that we've got. It's possible, but it's possible.
Anything further? Jenny?
I don't have anything.
Okay. The amendment on the floor is to remove the tobacco surcharge from the proposed Plan 1 proposal by CBIZ. Any further discussion? Commissioner Stinnett?
Would Commissioner Farmer be willing to add a date when we would suspend it just for a certain date? For instance, start this time next year.
But what does that accomplish right now? Now, my point is what we need to do, Mr. Stinnett, is we need to come back with policies, get that ironed out, meet with her, get our wellness program together with, get it approved, then do this.
Any further discussion on the amendment? If none, Jody, please call the roll.
Commissioner Stinnett?
No.
David Merle?
Yes.
Gary Farmer?
Yes.
Phyllis Crisp?
Yes.
Grady Caskey? Mike Taylor?
Yes.
Bill Dunlap? Sheriff Braun?
Yes.
Mayor Mitchell?
No.
Mike Lewis?
No. Okay, we have 6 yes votes and 3 no votes. That amendment passes. Back to the original motion. Discussion on the original motion.
I have a question that was put forward to me, and I don't know whether this would be through Jenny or Cole or who. Currently, if you have 2 employees who are spouses, one is carried as single, and the other one is carried as employee with children, and they're currently paying, what is it, $150. However, if we continue to carry them as that at $85 and $175, they would be paying $260. So they would be far beneficial to be carried as family at $225 on only one. Did we figure that in, or how are we going to administer that? And I didn't know the answer because we haven't gone over that I'm aware of. And I don't know who to ask.
I asked the same question. I asked the same question at the last meeting.
That would just be beneficial for them to go for total family.
Well, we may have to get Randy to answer because it has to do with the funding.
We didn't discuss it. I know what would be beneficial for the employee, Christine. What I'm
So-
saying is how we've been administering it one way, how we going to administer it now.
And I can give some background for some of the newer members to the committee, and I may have to get Mr. Vineyard to help me answer this question, but the reason it's being brought up is the funding structure from the county side because of the fact that 2 of the spouses are both county employees. So we have to get that contribution from the county's portion for each employee. So that's why we had to set it up that way. To get, one employee be covered at employee only, and then the other carry any dependents that they have, was so that we get the county, the county's portion of the funding right. As far as how we do that going forward, I don't know. We might need some extra guidance.
I think. Well, we talked about this a little bit last week, as Jenny alluded to. From what I understand, within your current policy structure, that it's set up to where you have to do it separately. So, and I believe, and correct me if I'm wrong, at that point you all would have to, if you wanted it to be on one family unit, wouldn't you have to pass a procedural change within the benefits to allow for the employees to be a family unit? The way that this was calculated was based on the same enrollment that the employees would still be employee only and employee spouse, or employee children with the other, just based on those current regulations. If we were to change that, then we'd probably want to move monies around to where it made sense and offset for that cost.
So at this time, we have a mechanism to deal with it, and the question is, do we want to change the current procedure that we have? Is that correct?
To my knowledge, correct me if I'm... That's how I understand it.
Thank you.
Thank you.
Sheriff Brown?
Mr. Chairman, can I ask Cole, just refresh my memory a little bit. Based on the recommended changes, what's the projected rate? Are we still be in the red at the end of the year?
Yes, sir. Yes, Sheriff. We would estimate now it'd be at around $280,000 in the red.
Can I ask you, if we included the retirees at the same rate of the increase as the employees, what would that do to the program?
It'd pretty much put you at neutral. So I figured by bringing up the retirees to the active employee cost, that it would increase your revenue by around $300,000. So it'd put you right around, I mean, obviously, if you're right there at within a couple 10,000, then variance within claims would make it to where you're either going to be right at zero, a slight surplus, or a slight negative.
Thank you, Cole. Mr. Chairman, I'd like to, make another amendment that we include the retirees at the same increase as we are the employees. I said I wouldn't do that, but based on if we don't do something, then the retirees will not have a retirement program, just like the employees will not. So I think it's going to pain the employees and the retirees some, but I think they ought to be kept equal.
Have a motion by Sheriff Barong. Is there a second? Second by Mr. Dunlap. The motion, or the amendment, is to include the retirees for the plan year 2016 at the same premium rates as employees, instead of waiting until 2017. Is that correct? Correct. Have a motion and a second. Any discussion? Okay, Jody, if you would call the roll. This is on the amendment.
Mr. Chairman, could I ask a question? So going forward with this vote, if we voted yes and this passes, any changes that are ever made by this group would apply to all retirees going forward. So they would pay whatever the current rate is anytime there's changes. Am I correct on that?
Yeah, unless there was a motion to exclude them, yes.
Okay. And I know ours is just a recommendation of the commission, but if the commission were to pass it, I should clear that up.
Correct.
They would follow whatever premium structure we have.
That is correct.
Gotcha.
Any further discussion? Seeing none, Jody, please call the roll.
Commissioner Lewis?
Yes.
Mayor Mitchell?
Yes.
Sheriff Barong?
Yes.
Bill Dunlap?
Yes.
Mike Taylor?
Yes.
Grady Caskey? Phyllis Crisp? Yes. Gary Farmer?
Yes.
David Merle?
Yes.
Tom Stinnett?
Yes.
Motion passes, or amendment passes. We're back to the motion, which is to approve the Plan 1 design by CBIZ with the amendment as amended to remove the tobacco surcharge, and with the amendment to include retirees at the same rate as employees for the 2016 plan year. Mr. Merle?
Mr. Chairman, thank you so much. When I sent this information out to our employees, I got several questions back, and some of them have already been answered, but I did have a question from several of our single employees or people who choose not to carry family about the increase of $60 for the employee only, but only $50 for the other plans. And we might have covered that, but I just wanted to make sure I had a good, clear answer so I can respond to those who've asked me that. So
I would recognize Mr. Harris.
Yeah. Thank you for your question. I came up with those numbers more of to try to get, I was looking at the deficit number of try to get to a reasonable deficit, if not even net neutral. The original proposal, if you recall, was a very heavy increase on the family units to bring it more in line, but after discussion from this committee, determined that we didn't want to place that much of a burden onto the dependents. So by pulling back on the dependents' costs, it caused a slight increase on the individual costs to offset for that change. And also looking at, we were looking at City of Maryville and City of Alcoa's employee-only costs. Currently, Blount County is significantly lower than City of Alcoa and City of Maryville's costs. This brings it back in line to where it's actually still, I believe, slightly lower than theirs, but it's pretty much right in line with them. So felt like this was a reasonable change to that part. Does that answer your question?
It does.
Okay, thank you.
Struggle with that.
I understand. It's one of those where we move from one tier to the other. I mean, I can make it to where the employees' costs go down, but unless we want to incur a greater deficit, I'm going to have to tweak it elsewhere. And there's a large employee-only population, so you get greater numbers from that. And the others, the dependents, when you compare it to, when you benchmark against the other cities, City of Maryville, City of Alcoa, I believe a few might be on City of Maryville's or City of Alcoa's plan. With the family rates, if we were to go to where we originally needed to go, that would probably put us slightly out of line with where the cities are currently. So this brings it to where everything is more in line by shrinking them and bringing the employee up.
I have another one here. One of the things we had to submit this week, from our department, is to the State Department on our teacher plan. You know, we get funds from the State Department of Education for teacher insurance, so we pay that to the pot here, and they do a comparison of our plan, and our current one has always passed. I don't think there's ever been a time it hadn't passed, but I didn't know if any consideration had been given to what it may change to in January if the commission passes it, because if I look at the state plan, I could not find online the premiums the employee pays, but when you look at out-of-pocket maxes and deductibles, we're exceeding a lot of the different levels. So Randy may have some information that I don't know, but we had to submit this week on the current one, but I don't know how the new one would line up.
Yeah, thank you.
And I don't know if that process has been followed.
Yeah, so those always under consideration of understanding that the teachers did have to have a plan that met or exceeded the existing state partnership plan. The state partnership plan has 3 options. It has the partnership, well, I say partnership plan. The state plan has 3 options. One is the partnership plan, which has a lot of wellness requirements tied to it that you have to meet to be able to achieve those lower deductibles that you see. The second is the standard plan, which does increase that deductible amount if you do not abide by the wellness, at which point the rates also go up. So you have a higher deductible for a higher rate under the state plan. Then your third option is the limited plan. That is a lower cost plan, but it's a much higher deductible and out of pocket. Your deductible with the limited plan is a $2,500 deductible. So that under that criteria, this plan does still exceed the state plan's level. As far as the costs, the state just sets what the overall premium funding rate is, and then to my knowledge, it's up to each entity to determine how much they're going to charge that teacher.
And I know they take a lot of things into effect, and I have no way to know. It's an outside agency who does that comparison, so I wouldn't know how they do it. I'm just saying,
if you were to
make sure it does follow that.
Yeah, so if you were to just even compare it to the limited plan, then this plan is still going to have a higher actuarial value than what the limited plan would, just because of the deductibles and out-of-pockets at that point. Okay. And then what I'm not sure about is how the wellness plan is tied into factoring that piece of it, because there's just requirements around that.
This last one is probably an administration question, Jenny, I've gotten several emails about the new allegiance that has been passed by the commission. Will we give them some information on open enrollment? We just have some concerns about doctors being covered, normal concerns when you change vendors. So will we do, I've been telling them it probably occurred during open enrollment, you'll get all your information, but, so I didn't know if there's anything ahead of time I could give them, or what was your advice on that?
I can work with Cole to see if we can put something together that we could go ahead and kind of just blast out to everybody. But the easiest way to get all the information to everybody at one time would be through open enrollment. But yeah, keep in mind, Allegiance is just going to be the third party administrator of it. It is the Cigna network. So if they are concerned about doctors, they could go ahead, and Cole, correct me if I'm wrong, but they could go ahead and go to Cigna's website and check and see, if their doctors are in the network. And typically they are. It's rare to find a doctor that's not in the network here, in my opinion. So,
Ms. Crisp?
Just kind of on what David mentioned about the $60 and the $50 on the single person. Go back to what the mayor and the sheriff was saying about the when both husband and wife work for the county. Maybe that's a savings, a $10 savings, that maybe that employee that also has a spouse, that they just pay the $50 instead of going to $60. I don't know if that would be possible, if there's nothing that you can do for those two employees getting hit. I don't know. I don't know if that's possible or not.
Yeah, and as I understand, that would be a decision that well, would it be this body, or is it a decision that HR makes?
this body sets the premiums for the plan. So if they want, and it's my interpretation, somebody else can correct me if I'm wrong, but if they want to set a different premium structure for when their spouse is involved, I would think that they would do this. My thoughts.
I mean, Cole, what's normally, how do you usually address that type of situation? Got you.
So, Jenny, do you know how many employees that would affect?
We have about 70 spouses.
Yeah. And, I mean, you see that all across the board on how employers handle that. So, I mean, that's fine to, I've seen employers do something to that effect of creating some sort of offset for the two employees that work in the same, or you see it to where they require them each to be separate policies just due to the number of deductibles that they have. But it would be more advantageous to the county if you kept the employees on separate policies.
Okay, thank you. Mr. Merle?
I was going to ask Jenny, is that 70 sets, so is that 140 employees, or is that 70 employees and 35 sets? That's what I was trying to...
I was getting ready to correct myself. Yeah, 70 sets of spouses, so 140 employees total. Sorry, yes.
Commissioner Stinnett?
So if we move the single back to $50, and then that couple takes, one spouse claims himself, and the other one claims a child, that would be $225, the same as family. And that would solve the problem. Is that correct?
So.
No, I don't do it, does it? It doesn't do it. Excuse me. I'm not right. It's incorrect.
You would have to do $25. Yep.
Commissioner Farmer?
As bad as I hate to do this again, could I possibly make a motion to amend to include in there that we revert from our current policy to allow dual spouses, or however you want to term it, who are both employees, to go back to being covered as a family? See, we did it the opposite way before, so it didn't penalize the family. And now where it has increased, it will actually still penalize the family if we carry it this way. Whereas previously, they would have paid more. If we go with the new system, then they'll pay more that way. Correct me if I'm wrong, Ms. King, is that not why it was done like that to begin with, that and to keep up with departmental contributions?
Yes, you are correct.
Thank you. That's why I'll make the motion then to do that. Yes, ma'am. Or the motion to amend, Mr. Lewis, I'm sorry.
Okay, Mr. Farmer, let me make sure that I've got this correctly. Your motion to amend is to allow spouses who are both employed by the county to be eligible for family coverage. Motion to amend by Mr. Farmer. Is there a second? Let's wait. We need a second really to get it on the floor to discuss. Second by Mr. Kaler.
That would, by doing that, will the employer still pay the employee's portion? Okay. Yes, sir. I didn't change that. Okay, but it's gonna add about 71,000 worth of deficit a year to us. Is that about right?
No, can I speak? Is that okay?
Yes,
Mr.
Jenny,
Farmer
go
just
ahead.
clarified. So on the county side, correct me if I'm wrong, but on the county side, the departments would still budget for both employees. The only change is that we're allowing the employees to save some money by being together as a family and not having to do employee only and family or employee plus children. So the county's portion would still be budgeted as is, that every department would still account for. If it's in the sheriff's office and the schools, they're both going to still budget for their employee, correct? Okay, thank you. Can we make that note can I ask for that to be clarified in the amendment just so we have it, or can we do that? Okay, okay, thanks.
Everything else remains the same. Is that clarified enough?
Yeah, no, I just wanted to make sure I had it right so we know what we need to do. So, I'm good.
Mr. Harris, is that, I mean, if we make that change, does it increase any deficit that we have planned for?
On the quick calculation, it comes out to a $35 difference between the family rate versus the employee child rate. Based on 140, that comes out to, I think, around $55,000. The part that's unknown is going to be the claims differential, because the advantage the county has by having an employee only versus an employee child structure instead of just a family is right now you have a family deductible that's 2 times your individual deductible. So right now, this would be a good benefit to the employee by doing this, but right now the family is technically exposed to 3 total deductibles. By making this change, they'd be exposed to 2. So from a claims aspect, without knowing what the claims history is of these employees, I wouldn't be able to tell you how that might affect the claims, but it would impact claims on family units that had multiple deductible expenses. If it was just one person in the family, it would be negligible. It wouldn't have any cost increase on the claims on that part.
Okay, thank you.
Or if you only had 2 people. So really it only affect those families that have more than 2 people in their family that had deductible type expenses.
Any further discussion on the amendment? Seeing none, Jody, please call the roll.
Okay.
Everybody understand the motion?
For the
Motion to amend is to allow spouses both employed by the county to be eligible under the family plan.
Tom Stinnett? Yes. David Merle?
My wife and I both work for Blount County Schools, so I need to abstain from voting.
Gary Farmer? Mayor Mitchell?
Yes.
Sheriff Braun?
Yes.
Bill Dunlap?
Yes.
Mike Taylor?
Yes.
Grady Caskey? Commissioner Lewis?
Yes.
Phyllis Crisp?
We have 8 yes, 1 abstain. The amendment carries. Back to the original motion. Question has been called for. Without objection, Joey, would you please call the roll?
Can I make a motion for an amendment? Am I in order here?
Yes, sir.
I don't, I'm not an elected official, so I get out of order on some of these rules of order, so.
Yeah, and I apologize, Mr.
Yeah,
Merle,
that's
the
fine.
question has been called for
Okay.
by Commissioner Farmer.
Okay.
Yeah. We need a roll call vote on call for the question. Jody, please call the roll.
Commissioner Stinnett? No. David Merle? No. Gary Farmer? Phyllis Crisp? Yes. Grady Caskey? Mike Taylor? Yes. Bill Dunlap? Yes. Sheriff Braun?
If you vote,
Mayor Mitchell? Yes. Mike Lewis?
yes. 6 yes, 3 no. Call for the question is affirmed. We are voting on the original motion. Okay, the original motion, which is to approve Plan 1 design recommended by CBIZ with amended by with the removing of the tobacco surcharge and establishing a retiree rate to be the same as the employee premium rate for beginning in the year 2016, and also amended to allow spouses both employed by the county to be eligible under the family plan. Joe, if you would call the roll, please. Vote yes to approve, vote no not to approve. To forward to the full commission. That's correct.
Commissioner Stinnett? Yes. David Merle? No. Gary Farmer? Yes. Phyllis Crisp? Yes. Grady Caskey? Mike Taylor? Yes. Bill Dunlap? Yes. Sheriff Braun? Yes. Mayor Mitchell? Yes. Mike Lewis?
Yes. Have 8 votes yes, 1 vote no. Motion passes. Forward to the full commission. That being the only item of business for this committee, we stand adjourned.